the one traveling to Nigeria, he needs to move to the currency booth in order to go and get the money which he wants, right? And the third example, we were taking advantage of the third example, we were taking advantage of the naira, because like I said, the naira lost its value. We were taking advantage of that opportunity. We needed to go somewhere where we can exchange franc CFA to naira in order to make money. So that was all physical. You see that all these three examples which I gave were physical forms of forex trading. However, the digitalized form of forex trading is simpler, it's easier, and straightforward. You buy and exchange one currency against another. You don't need to go look for a buyer or a seller because you're having direct access to the market. You're having direct access to the financial situation of a currency against another compared to another. Another advantage of learning this forex trading is that it gives you the global knowledge on how the economy works. It was thanks to my knowledge in forex trading that I took advantage of the naira when the naira was devaluating, when the naira was losing its value. It's thanks to my understanding of the forex market that I took advantage of it, and it did pay off. One good thing is that forex trading doesn't require a lot of time. No, it doesn't. It doesn't require a lot of time. You just need to master some few concepts and boom, you're cashing out of it. Even though mastering these concepts is not always as easy as it sounds, but forex trading as a whole is not that difficult. And another good thing about forex trading is that you make profits both while buying and selling. Now, if you can see, when I said here, a selling scenario, when you know that the value of a currency will drop, you're selling. When you know that it will rise, you're buying. The forex market gives us the possibility of making money either ways. So be it while selling or while buying. So that's basically it for this. What do you guys have to say about that? Can you guys hear me?
Yes, sir. Yes, sir.
So is there any question or any word or anything to ask? Can you guys hear me?
Yes, sir. The main concept of forex trading is just um trading with different currencies. Then the rates on which you are trading is your profit, right?
Yeah, based on the physical aspect of forex trading, that's just it.
Okay, thanks.
Welcome. So, like I said, that's the physical aspect of forex trading. You just getting one currency against another, and that profit, that extra amount is what you get out as your profits. The difference in the rates. But now you will not actually see this rate when you're doing digitalized forex trading because you're having direct access to the currency's international value, the currency's raw value. So you don't need someone to determine the rate. You determine the rate based on how much you risk. So with time we'll get very deep. So we're just going step by step. So any other question? Any other worry?
Quick question. The chart most times that they are usually watching is the chart measuring the rate at which the currencies are rising? or the rate of buying and selling?
Okay, that's a good question. Let me show you something. So, like you said it yourself, the chart measures basically how much is in an exchange, right? If I may ask, what country are you from? Go.
Nigeria.
Okay, from Nigeria, right?
Yeah.
Uh, this is the US dollar against the naira, right? Can you see my screen?
Yes, sir.
Okay. Now, can you see my mouse?
Yeah, yeah.
Okay, I want to show you something. Now, if you look at this position where my mouse is showing, what's the value written down there?
1,480.
Now, that's the equivalent of $1 in naira. Can you confirm that?
Yes, I'm saying this right now.
Voila. So the charts which you're seeing is basically showing us the equivalence of one currency against another. If you look at this thing that I said, you have USD NGN. USD means US dollar. NGN means naira, right? And this is the value of one US dollar in naira. 1,480 naira will be equivalent to one US dollar. So you see that the rates are very clear. The rates are before in front of you. You basically take advantage of these raw rates in front of you. Right? So the charts where people are always watching, they are basically watching the difference in currency. That's what they are watching. But for them to make profit, they basically predict. For example, if I open this chart when I was here and I say it's going to sell, I say it will sell till here, for example, till here. Why the market makes this movement, I will make profit. Why the market makes this movement, this centralized movement, I'll be making profit. However, I will know the market's next move based on analysis, and that we are going to look at that based on analysis. I don't know if that is sufficient enough. Is it okay for your question?
Yes, sir.
Okay. Any other question? Yeah, 10 fact. Unmute yourself and just speak. I'm getting you.
Yes, just to make things clear for the other person that asks the question. The chart is just like history. It's just like recording all points where price have reached before in the past, right? So if to say price reach a certain point today, tomorrow to record that data will be identified by candlesticks or line charts. So it's just simple data from years back is what forms the chart. That's just it. Because for my question, I think maybe you mix it up. You're asking about what the chart represents. I'm trying to make it has happened before, and it's to predict the future price movements. That's just for in simple terms.
Awesome. Awesome. Thank you very much. Is he a little bit clearer now?